Welcome back to the podcast, where we explore the psychology behind smarter investing and better financial decisions. Today's topic is one that sounds simple, but separates those who build lasting wealth from those who spend years chasing it: the discipline behind financial success. Joining us today is a behavioral finance psychologist, market historian, and long-term investor who has spent years studying why emotions, not intelligence, often determine financial outcomes. So let me ask you, why do so many people know what they should do with money, yet so few have the discipline to actually do it?
That's a fascinating question, because the gap between knowing and doing is where fortunes are either built or quietly lost. Most people assume financial success belongs to the smartest investors. History tells a different story. Wealth is usually created by ordinary people who consistently make disciplined decisions, even when those decisions feel uncomfortable.
More?
Think about planting a mango tree. You don't dig it up every week to check if it's growing. You water it, protect it, and trust time to do its work. Investing works the same way. Yet many people treat their investments like lottery tickets, expecting overnight miracles. When markets fall, fear convinces them to sell. When markets soar, greed persuades them to buy at the worst possible time. That's the psychological trap of market timing. A famous investor once said that the stock market is a device for transferring money from the impatient to the patient. That simple sentence explains decades of market history.
More?
Look back at almost every major market crash. Whether it was the global financial crisis or the COVID-19 panic, many investors sold because they believed the world was ending. Those with discipline didn't ignore the fear. They simply refused to let fear make the decision. Years later, markets recovered, and patient investors were rewarded, while emotional investors were left wondering what happened. Here's the surprising part. Your greatest investment isn't your portfolio, it's your habits. If you automatically save before spending, invest consistently regardless of headlines, avoid checking prices every hour, and keep learning instead of reacting, you are building something far more valuable than quick profits. You are building emotional resilience. Imagine two friends. One spends every evening searching for the next hot stock. The other quietly invests a fixed amount every month, year after year. The first looks exciting. The second often becomes wealthy. Discipline rarely looks impressive in the moment. It looks repetitive, it looks boring. But compound growth loves boring behavior. Ask yourself this: are your financial decisions driven by a plan or by today's emotions? Because every market cycle offers the same test. Fear whispers, get out. Greed whispers, buy more. Discipline calmly asks, has my long-term plan actually changed? Financial confidence doesn't come from predicting tomorrow's market. It comes from trusting a process you've committed to. That's how wealth is built, not in dramatic moments, but through hundreds of ordinary decisions repeated over years.
What a powerful reminder. Financial success isn't about finding the perfect investment or perfectly timing the market. It's about mastering yourself. If this conversation challenged the way you think about money, subscribe for more insights into the psychology of investing. Share this episode with someone who needs the reminder that discipline, not excitement, is the real path to lasting wealth. Until next time, invest wisely, stay patient, and keep your emotions working for you, not against you.